We're
We're
live.
live.
We're back.
Welcome
on,
to the
Mikey.
SMB show. Week commencing 20th of July, 2026. Big news.
Big news. Dun,
Dun, dun, dun. How are
I
you,
think
young man? You okay?
I'm good. I'm very good. How about you?
Yeah, good. Good result yesterday. Sorry, I know we keep opening with football, but good result last night. Spain won. Hey,
Spain won. Spain. No, they did. They did. It was good. Do you watch it?
no, I saw half of it. Fell asleep. Saw the highlights this morning, but yeah, I'm so glad.
Yeah, me too. Me too. I fell asleep too, but it was good. It was from what I watched. It was good. It's nice to see like Lamine Yamal's like the next generation, isn't he? So it was nice to see that. It was good. I was just
Insane.
I was just happy in general. It was like Spain beat FIFA basically. So. So what's happening in the world of M&A and business, Mike?
Now, you may have seen my new short, but M&A value has hit 178.9 billion this year, 2026, till July the 7th, which tracks roughly, 347 billion annualized, which that would beat the world record. The world record that would beat the World Cup. The world record in 2015 of 309 billion. So could be a breaking year. Could be. We'll see how it pans out.
Did you know though? I think that it's not even like the market. The deal volume's up in regards to like in dollars, but I think people are just being a bit more picky on the deals that they're doing, and they're just doing. They've been a bit more, I don't know, picky with their deals in general. There's obviously a lot of better deals happening. There's massive consolidation plays happening. I think people are being a lot more selective and making more of strategic acquisitions rather than just buying for, just to increase their portfolio. We've seen a lot of that about 5-6 years ago, where people were just buying up everything. People are being a bit more picky and more disciplined when it comes to M&A. But it's good to see that, even though interest rates are a lot higher than they were 5 years ago, that we're still seeing, large deals being done. There's still being a lot of money being raised in private equity. So people aren't taking their foot off the gas. If anything, they're doubling down, which is good and bad, right? When people come to huge consolidation, it's good to see the deal volume up. But, at some point, small businesses are going to be a part of that net that they throw out into the sea. And the bigger those small businesses get. So the next 5 years is going to be an incredible opportunity for small business acquirers to build something quite meaningful to then sell into someone a lot bigger that's still going through that huge consolidation. But I think that if you try and dive into this industry in 5 or 6 years' time, is going to be a completely different ball game. I think if you come with no capital whatsoever, no network whatsoever, it's going to be very difficult to get your feet wet, I think. What's your thoughts, Mike?
Yeah, definitely. And just on the PE coming into the lower market, like we're seeing it obviously more and more, right? We're having more of those conversations, and they're kind of coming down again to consolidate, build like little groups and stuff. So yeah, very interesting times ahead. I'm actually quite excited, to be fair, because how some years it's doom and gloom, and some years it's very positive, and it feels like one of those years,
It does. I think that we've seen a lot of doom and gloom, and I think people, like, the thing is, right, we can't control what's happening in the market, but buyers can't, right? Sellers can't. So at the end of the day, wherever we are in the credit cycle or the macro environment in general, you've still got to stay busy. All things like this, when people go through those situations where people get squeezed for whatever reason, or there's changes in the economy in general, you just have to be more disciplined in your approach. Like you should be anyway, right? But investment discipline should be number one. But when interest rates are super low, there's more margin for error. Now, not so much. So, of course, you need to still make sure that debt can be serviced, but you also have to consider other things in the market as well. But it is an exciting time because I do think that, some of the clients that we're working with now are seriously doubling down, trying to buy up as much as they can and consolidate as much as they can in their industries, ready for, that 4 or 5 year time period when they are going to be big enough to attract, potentially institutional capital and maybe even some large strategic acquirer, because this isn't going to stop. The consolidation's happening at the highest level is happening. We've seen huge deals, right? The Warner Brothers deal was a huge deal. Global news, right? There's a massive consolidation play. We talked last week about the Sky Comcast acquiring the ITV streaming platform too. So at the highest level, where there's serious competition, we're seeing consolidation happen. So local small businesses, this is a huge opportunity now to go and roll up some smaller industry. Not that it's just happening now. It's been like this for some time, but even more so now, I would say.
Yeah, absolutely. I mean, the deal we were working on, obviously I'm going to blur the details, but I'm just going to completely blur the details here. There's a company in Scotland, and there was a company, let's just call it in Europe, and the company in Europe, right, they had the efficiencies, the same size company, right, way less staff, the European one, right? So it was like they were obviously, in that sector, they were, just because they are a live client. So in that sector, they had massive manufacturing efficiencies and so on. So obviously, hence that was a very favorable acquisition, right? You do know the one I'm talking about, just because I have to blur it. But if I said the actual things to you'd know.
I'm following.
Okay, good. I'll just check in.
Yeah.
Just because obviously they're a live client, I don't want to, NDAs and stuff.
Yeah. No, 100%. This is the thing. I think what we're also seeing, and even a friend of ours that we work with, that was a previous client, now more of a friend. They acquired a company in the UK that had global reach. They also distribute to UAE, USA as well. Now they've just one of them. I'm talking about Graham and Pat. Pat's gone over to the US now. And they're expanding operations over there massively. They're actually looking to grow through acquisition over there. They just made a huge hire. I don't know if you've seen their LinkedIn post, but they're really growing massively. And I think that that's what M&A allows you to do. Is, of course, it really depends on the business that you're working in, but you get to look at those, global expansion in some cases, even for small business. They bought a small business, and now they operate across different jurisdictions. And they're generating revenue across different jurisdictions and have reach across them. So, it does become a lot more appealing if you are looking to build to sell. And some people may not want to sell, right? But I think that the power of M&A allows you to, as we talked about many times on this show, is it allows you to compress time. It is like time travel. You don't have to try and build from scratch in a different jurisdiction or different location or even close to yourself. You go and buy decades of historical data, and you get to look at those cost revenue synergies and the strategic position in general, and allow yourself to grow the company a lot faster and much more efficiently as well. I think this is why last week we talked a bit about the Sky ITV deal. If you think about Sky, right, they already have massive reach. They have Now TV. They have millions of subscribers in general, right? And then when you look at ITV, it also has tons of viewers in general. I think it's one of, if not the biggest, free ad streaming platform. I think with this free ads or something along those lines. I read about this last week, so you have to fact check me on that one. But I think what it does in general is that consolidation opens up tons of advertising synergies, cross-sell opportunities. They also, just purely because they kind of have the similar ICP, they also can be a lot more, or they can improve their targeting, right? Their audience targeting, they're going to be able to improve yield, definitely lower acquisition costs or customer acquisition costs in general, because very, very, very similar customer that they're both reaching out to. So there's loads of synergies with it in general. And again, we talked about consolidation. This is a classic consolidation play. They're basically going to become the UK's biggest premium advertising platform, obviously outside of YouTube, because YouTube's obviously in the arena now as well. So we're definitely probably going to see those bundle packages that they're going to be able to offer in the near future. And I think that for them, it's probably thinking, well, how do we compete with YouTube and Netflix? BBC is not really competition in the UK because they're more public services related. And I don't know whether their viewership's going down because people are trusting them less and less. But to try and compete with someone like Netflix and YouTube is very, very hard because they have serious distribution. But I think this acquisition gives them like huge coverage across tons of different categories and a huge library of content, which, when you're looking at, like, they can go all the way from like kids entertainment to sport, all the drama, the movies, everything in between. Where not that YouTube and Netflix can't, we are seeing Netflix dive into that arena of sport. But there's been massive changes recently, but before that, it was just focused on movies.
Yeah, absolutely. Yeah, well, I think on the consolidation, picking up the marketing, they're not competing against each other as much now, so like I must imagine that like two big players, probably like marketing budgets are going like this against each other. So that's consolidated there. I read that they're going to make some layoffs in the tech team as well. So they just keep, I don't know which one it is, but they're going to keep one of the tech departments, probably merge it a little bit, obviously, and just keep, if you've got two tech teams, again, just consolidating that as well. And then I think the other thing was the licenses as well for some of the rights, I guess, to sport and things as well. Don't quote me as much on that one. That's what was brought up in an article I read. I did wonder about that because technically they are still two separate entities. So I don't know how that looks moving forward. It was a 3-year kind of project to do that. So it can make sense, I guess, if it's just the one like holding company, basically, or if it's all just through Sky, it seems like, on the licenses, because that's an expensive thing as well. So they want to get £200 million run rate in 3 years, basically. So yeah, it's a good play, right? And was it 1.6 billion, wasn't it? Yeah, and I think 1.2 billion cash. So it's 1.6 billion. If you look at that, if they're going to save, if you're going to get to that £200 million run rate, it's kind of looking like a sensible acquisition, even though it's a big number.
Oh, without that, I do think though that it just seemed to be that they're probably going to have to jump over a couple that will go through a bit of red tape, jump over some hurdles with regulators and stuff. I've seen there could be some issues with like the UK's competition authorities as well. It's the UK, right? UK and Europe. If there's some friction to be had, they're gonna make sure that there's friction involved, right? So, but I think that outside looking in, apart from like potential integration risk, maybe because of the previous competition. Other than that, really, it looks like an amazing acquisition from the outside looking in. And it fascinates me just because of, again, we're talking about the consolidation play, and we're going to keep talking about this on these lives because you guys need to understand that is the play right now. The M&A play is consolidation. That is the play. We've seen many different plays previously, but this is the play right now. So you need to be thinking the same way as these guys are. And it's like, for instance, a good way to think about this, if you're a local building firm and you're in a local town and there's probably 2, maybe 3 large building firms in a small town in the UK, like big ones, right? Probably 2. The thought of you buying one of your competitors doesn't even cross your mind. That's what's just happened. That's literally what's just happened here. So you need to start thinking a bit bigger and thinking that you can do that. And you may not want to buy the competitor, but you need to look at what's in your vertical, look at where there is some potential revenue and cost synergies in some of the companies you are transacting with, and seeing what you can do to build something a lot bigger. So it's definitely food for thought there. But if you think about it, we're talking about huge consolidation and competitors. Stripe, $53 billion bid for PayPal. Like, I did not see that coming. That's crazy. Wild, as far as I'm concerned. Like I literally read that this morning just before this. I didn't even know that even happened. So I was quite shocked, if I'm honest. I think it just shows though that you've got some of the probably biggest innovators in the world there, and they still use an acquisition to accelerate growth. Like, I would probably argue that I know they're kind of slightly different, same customer, but slightly different in some ways. But I would have thought that PayPal there is no competition for Stripe with PayPal in their field for commerce in general. But rather than trying to grow whatever part of their business they want there through PayPal, or any users are using PayPal, it makes sense for them to do it. But yeah, I was just a bit shocked by this one.
Yeah, Yeah, no, very interesting for sure. And
Yeah.
you said as well the finance raise is $50 billion, right?
Yeah. So $53 billion bid. Finance has been committed from the bank at 50 billion. So less than 5% of the deal, the 5% of the deal needs to come from equity. So yeah, and you made a good point just before we started there when we looked at this news is, if you're buying a small business right now and the broker's telling you, we need 100% up front, or we need you to put in 50% or whatever it is, like this is how these deals work, right? It really cracks me up because private equity effectively do almost every deal no money down. They raise capital from investors and they go to bank for the debt and then they buy a company. Okay. So technically they're using 100% leverage. It happens all the way at public level. It happens at private equity, it happens in middle market, and it happens at small business. It's just trying to educate people through this process. So yeah, I thought that was interesting too. $53 billion bid, 50 billion coming from the bank, 3 billion coming from equity, or wherever else that's coming from. I think that the good thing with this one for Stripe is obviously PayPal's been around a long time, right? It's not like they have. Well, I wouldn't even like to think of how many millions of consumer accounts PayPal has. It'd be interesting to probably have a look, but I would probably say it's hundreds of millions of people that use PayPal. Aren't they Venmo as well? Are they linked to PayPal?
I'm not sure actually. Let me just quickly
Yeah, have a
Google it.
little look. I'm pretty sure that Venmo are part of PayPal because Stripe's in the blockchain arena too, right? So you saw, and then I know PayPal's sort of in the crypto arena as well. So it does make sense.
Oh yeah, they had a big push on crypto at one point, didn't they? I mean, everyone sort of did, but yeah, they sort of haven't heard much else of it, to be honest with you. Yeah.
Yeah. I did see that PayPal though was said as a bit of a low ball
Acquired
offer.
Venmo in 2013. Yeah.
Right. Okay. Yeah. Yeah. Well, like I know PayPal. Like I said, the PayPal's board said is a bit of a low ball offer. It's like 7 times EBITDA. Like if I'm PayPal, I'm not selling for that. So, we've seen small companies go for more than that. So it's PayPal, right? But yeah, I suppose it depends. But yeah, like this is another case of when you look at capital raising and strategic partnerships. Stripe's partner with Advent for this, which is a PE firm. So this is a joint acquisition, like a 50-50 acquisition. So yeah, it'll be interesting to see how that one plays out. There's going to be another long one, probably like the Warner Brothers deal, like the ITV Sky deal. Obviously, there's other people that need to sign this off and get involved. But yeah, I think that the biggest takeaway here is that if you are looking to buy a small business or small to medium-sized business, is really understanding that how deals get done. Okay, the brokers that you're going to be dealing with, unfortunately, the incentives for buyers and brokers is completely broken. Okay, the brokers incentivized just to win mandates. They're not incentivized to actually complete transactions. So them winning the client, unfortunately, usually comes before honest advice. They end up overvaluing companies to secure clients. They'll tell a business owner their company's worth 8 million when it potentially is worth 5 million. It's a sales tactic, okay? They create those unrealistic expectations, and unfortunately, they kill deals because the overpricing ends up destroying a lot of the value because the business sits on the market for 12 to 24 months, sometimes even 36 months. Then throughout that time, a lot of the business owners are in sell mode. So performance sometimes, starts to deteriorate as well. If management's involved in that exit, well, a lot of the time they're not, but sometimes they are. Sometimes they can lose focus if they get wind of what's going on. And then, it just starts to kill deals. A lot of the business brokers are kind of like, they're just marketers, right? They're not like M&A advisors. They don't really understand. They're not like an expert in valuation, deal structuring, finance, tax, diligence, negotiation. They're not an expert in any of those things. A lot of them just sit there and gatekeep on calls. They end up becoming the bottleneck. So, instead of giving that sort of open line of communication, they sit in the middle, jam themselves in the middle, delay responses, delay sending information, reduce the deal momentum. And unfortunately, slow data kills deals. Buyers need to be able to access financials very, very quickly. They need the customer data, contracts, they need operation, they need all the information as quick as they possibly can. You have 1 week of delay and it can take away the confidence. And also, in a lot of time, serious buyers will just move on. But if you're winning 5 to 10, sometimes 20 mandates a week and selling small business owners a dream, then their business is just cash flow. It's not success fees. So, and it does baffle me, right? Business brokers, their business model selling businesses, but it feels like they don't care about selling businesses. It absolutely baffles me. They generate their activity and for the client of like, oh, we've send out a load of NDAs this week, so we got a load of people interested. They're not like out there actually trying to sell the company. Honestly, it frustrates the life out of me.
Well, I think the biggest thing, and to be honest with you, I'm not going to name any names, but it's the biggest brokers people moan the most about to us. So the biggest thing we have from a sell side point of view is, oh, I've been listed with blah blah brokerage. We've been on the market for like you said, 1-2 years, and I've had one bit of interest. And like obviously we've run and sold stuff, and it's like I'm just going to take a scaffolding business that we had for sale many years ago. They had one buyer, it wasn't that serious. We had 67 serious inquiries, So, so yeah, it just I don't know what they're doing. I'll be honest with you, I don't know what they're doing at all. But I think our thing is like we're very aggressive in our outreach and approach to sell. We've got a lot of. I'm not going to give away any secrets, but we've got a lot of off-market generation in terms of finding buyers as well, and we run a lot of advertising as well to actually sell the business, and amongst other things. So, obviously we do have buyers as well, PE buyers and industry buyers too. But yeah, it baffles me because companies who have been around that long, probably I don't know, probably like 20 years plus, right? So some of the big brokerages. And just literally people say, well, we get nothing from them. So, yeah. And there are some good brokers out there. I'm not saying that, but, they're on the more smaller side of things as well. But, yeah, it's an interesting space for sure.
Well, if you remember a few years ago, right, we basically launched a platform purely for people that was doing a lot of outreach. They was speaking to business owners. If that business owner wants slightly too much for their business, there may be someone else on the market that wants to buy that company. Okay, we found quite quickly that most small business owners, it sounds crazy to say this, but based on the data and evidence that we've personally seen, would prefer you to tell them that their business is worth more than tell them the truth. And I find that absolutely crazy, which is why that whole arena didn't suit us in the way that we was positioned at the time. Now we work with much more sophisticated people that want to sell their business, more sophisticated business owners, more sophisticated buyers, people that understand what it is they want to buy, or people that want to sell their company, and they're open to that honest conversation, because there's no point in us working with a company and telling them we're going to get X when we know that there's not a chance we're getting anywhere near that figure. So I think that one of the problems here is the unrealistic valuations, people that not preparing the business properly for sale. They don't end up managing the diligence very professionally, but they kind of get it to that stage, and then all of a sudden now they don't want to gatekeep and don't want to get involved anymore, because I think it's a lack of knowledge. They don't tend to solve problems very well, and they're not very good at keeping transactions moving. Where, if we're working with someone on sell side, we'd rather take the time to get the business actually ready for sale, to give them their best chance. And we actually speak to people that actually want to buy it. And every business that gets sold should be a win-win. It should be a win for the seller and a win for the buyer. And the only way that happens is everyone speaking at the table transparently and really understanding what's going on. And I think that when you're going through, as you said, there are some good brokers out there. When you are going through most brokerages, it always feel like there's some smoke and mirrors, or there's something not being said, or it says it all in the IM, right? You go on IM, and then they've added back everything, everything, and they're like, oh, the owner only spends half a day a week going through emails and doing some payroll, and then you speak to the business owner and they're in there every day. And it's like, how did that even get in the IM? I understand they're trying to make the business appealing, but all that is, well, now you have to scrutinize everything else, which you would anyway. But, all of a sudden it just puts a bad vibe over the whole thing immediately, just purely because you're like, well, if that's not true, then I can't really take any of this document for true. You just have to just unpack everything. I don't know, it's very frustrating for me. It winds me up. Honestly, it winds me up. People are doing this service. Can you imagine if people out there selling houses, right? And you're like, and there was no survey that needed to be done, and I hear that this house is amazing. Yeah, just buy the house. It is, and then you go off a document they send you. You buy the house, and then the back of the house it's falling apart. So, well, how come you didn't tell me about this? It's like, well, you didn't put this in the document. Well, we didn't think you need to know about that. Right, okay, you didn't need to know about that, and that's where it feels like they do. Or like a car, you buy a car on Auto Trader, and they're like, yeah, the car's immaculate. You go and turn up, and there's no engine in the car. That's where it feels like the way they're putting these businesses for sale is just so annoying. Like, yeah, I think that if you're a buyer right now, I think that first and foremost, the sort of process that you need to be thinking about is first and foremost, what's your investment thesis? What are you actually looking for? What industry? What's the criteria? And what's your actual acquisition strategy? Okay, that will get you to the point where you can overcome a lot of these challenges we just talked about. Then you need to find a way to generate deal flow. Okay, so realistically, based on what we just talked about, you need some off-market deal flow. You need some off-market deal flow. You need to have proper conversations when you're sourcing these deals. You start to build relationships. If you are going to go down the broker route, and I don't think I don't think you should overlook the broker route, because there are some good brokers out there. Be very concise in what you're looking for and tell them you don't want anything outside of your criteria. Straight away, you look like a much more credible buyer than being super broad. Then when you are getting those deals come across your desk, first and foremost, you need to analyze the quality of earnings immediately. We need to know, how much the business really earns, not how much the seller or broker tells you it earns. Okay, you start looking at the risks, start looking at the red flags, start looking at the people involved. Okay, if you're buying this and bringing it into an existing ecosystem, is there a strategic fit there in general? Then throughout that process, you will gain some negotiation leverage because of all the information that you started to receive. So then you can start to establish real price expectations. And if you are roughly there or thereabouts, then you need to secure exclusivity as well, so you can actually spend a bit more time working on this, and you're not putting the time in and then you're competing with somebody else. That's the next steps to this. Then you're going to start looking at the deal structure, the deal architecture, okay? Because when you are sort of designing how that transaction's going to work, essentially, there's a lot that goes into that part of this, okay? You need to look where, first of all, where's the risks, where's the risks in the transaction, because they're going to continue to come out. Everything can look like a risk, but everything can also look like an opportunity. So it's important that you work with a good deal team to be able to bring you back to baseline and be like, okay, well, that risk, we need to try and mitigate that risk as much as possible. However, there's a lot of upside potential on this side. But remember, we're not going to pay for potential, okay? The potential, if you want to, that needs to be linked to performance. Everyone's next year is always their best year, okay? Or the business is always doing the best it's ever been doing. So you need to be careful on the potential side as well. Then when it comes to the actual execution of the transaction, this is where you need an insanely good deal team, okay? The diligence on the financials, the legals, and just the completion mechanics, these need to be executed perfectly if you're buying a business, okay? If you're selling a business, same thing. It needs to be executed perfectly. And then what you need to be thinking about is the value creation. First of all, obviously, how you're going to integrate the business and the transition period, what that's going to look like. But where's the value creation going to come from, right? The first 100 days is always key. You start looking at, what can be improved. why are some of the reasons you've bought the business, right? You would have obviously seen a lot of the upside as you've gone through diligence, but are you looking to improve operations? Are you going to look to integrate some form of technology? Are you looking to grow EBITDA? Are you just, are you going to pursue bolt-on acquisitions? There's so many things to consider, but you need to have a definitive acquisition like framework of what you actually follow, and otherwise you're going to be running around like a headless chicken. And a lot of that as well allows you to get past those brokers as well. If you have a great team working for you and you are looking to potentially entertain some of those broker deals, as Mike said, they're not all bad. You want a good team behind you to try and navigate through all the red tape and nonsense that the broker puts in front of you. So as I think everyone can see here, I'm very passionate about the way brokers deal with these transactions. So frustrating.
Preach it.
Preach it. Let's
No, to add to that, like it is very frustrating. The brokers put you through a lot of hoops as well a lot of the time, and I think it is a bit unnecessary. Like, I don't know, obviously they have their NDAs, which I understand, and there might be like bio profiles and things like that as well attached to it, and a load of questions before you can even entertain things. But a lot of that is just kind of gatekeeping, which I understand. But we've worked with clients who have come to us, big businesses in the same sector as what they're trying to acquire, and they've said, look, I've got fed up with brokers. The person in question sends very quite short emails, so it's like, in his mind, he's qualified, right? He's more than qualified. So he's like, I want to buy this business, send me more information. But then the broker's sending all these documents that he has to sign. He's like, I'm not doing that because he's a busy guy, right? So it's like, it's a hard balance. So obviously we do help with that as well. If there's a good deal from a broker and it's a genuine good price.
Yeah, look, we've worked on deals with brokers plenty of times, right? And I think that's where you filter out which ones are easy to work with than others. Which there are some good ones out there, but it's filtering through them. And a lot of the time, I think that when you're working with someone that if you're working with a team that understands what it is they're doing and understands how these transactions work, we've seen a lot of brokers get intimidated by that as well, and they do kind of fall back because they feel like they're a little bit out of their depth. And unfortunately, you have to educate the broker through the process a lot of the time. And it sounds crazy, because that's their job. But, a lot of the time they don't understand. Like, we've had a broker previously that has sent us over their own little Excel spreadsheet, and they've added, they thought the D in EBITDA was dividends. That's a broker from one of the big firms, by the way. We said, you can't add those back. And they're like, well, you're talking about the D in EBITDA as dividends. I'm just like, well, wow, what are we doing here? How is this person running this deal? It's wild. But yeah, like that, a lot of the time you'll find that as well, which is frustrating, but it's also a bit of comedy along the way.
Yeah, it's a hard one, because I think, I'm just guessing, there's good commissions and stuff in the job, and it's like, but they're not people who are buying and selling their businesses for themselves. So it's like, it's a good job, and I'm not bashing jobs. It's just like, you see what I mean? Like, if you're buying and selling businesses, you're probably not going to be a business broker, right? But you kind of need the experience.
Yeah,
I think you need the hands-on experience to be a good business broker, personally.
Oh, without a doubt. Like, I think that that's what separates us on, especially some of the bigger deals we're working on right now. You're talking, one of the deals we're taking to market for over 50 million. That sort of size deal. I think you have no choice but to be able you need to understand what it's like to be on buy side and sell side to take that business to market, because there's a lot of emotions involved when someone's buying or selling a company. If you only understand what one side feel, then you're probably doing your client a bit of a disservice there. So, and if you haven't bought and sold a company, that's okay, but you have to go on a bit of a journey to understand what it feels like on both sides. And because to understand that side of it, I think it's really, really important. And I think that's how you represent your client in the best possible way.
Yeah, absolutely. And on top of that, the experience, there's a lot of different personalities to navigate as well, So There's emotions and personalities. They're two quite big things that come out in a deal, buy and sell side, right?
Yes, there is. Definitely, we've met some characters along the way, that's for sure.
Yeah. I mean, some good characters and some interesting characters for sure. But it's all fun and games at the end of the day, really, isn't it?
It's also cool. You start to see like what people have built, right? Like some of the companies that people have built are incredible. We've seen some amazing companies be taken to market and also acquired. I've also seen some companies you're like, wow, how on earth have you built it to this size in this period of time? And it's a lot of the time sometimes you think that some of the actually products and services that you see that people are selling, you're like, you didn't realize how much demand there was for those. Oh, I'll tell you what, a funny one was when we went to the SMB, the SM Bash, sorry, in Texas, about 2 months ago now, right? 2 months?
Yeah, 2 months. Yeah.
2 months ago. I remember Kevin pulled that slide up and he's like, these are some of the companies that we've helped transact on and some of the niches. Because I feel like when people go into this, they're like, I'll just buy something in construction, or I'll just buy something in that industry, or something in healthcare. Obviously, this is so broad, right? The different kind of avenues you can go down in healthcare, construction, in every industry, really. And he was like, he pulled that slide up and he was like, a nut brokerage, or or like, what was it? Like,
so like, just like stating the obvious, they broker nuts, right? So like, if you're like, I want to buy X amount of kilograms of walnuts, you're like, I'll get you the best price for it, right? It's just literally how it sounds, isn't it? It's mad.
Yeah, and then there was the pet funeral home or something. I can't remember the actual whatever he called it. Yeah. Like there was, he listed like 20, 30 companies, like niches that people, he's like, these are all gold mines. These all made a ton of money. It all been on for a long time. And, these are some of the companies that people have bought, but no one starts their search criteria and is like, I'm going to go out to find a nut brokerage unless you're already in the game, right? So it's important to, I think, for people that are looking to buy companies to understand there is a gold mine everywhere you look. You just have to try and like go look at the niches within niches. I think that, but it's hard, right? It is hard. I get it. You're not always going to find exactly what you're looking for, but you never know what you stumble across while you are searching.
Yeah, crazy. And I think probably America is more an example of those funny niches than anywhere else, isn't it?
Yeah, I'll tell you what, though, we're starting to see a lot more interest in companies in Europe as well. I think that I was speaking to someone the other day that are looking more. They're looking at French companies, like they're saying that like the legal system's obviously quite hard to navigate, but they're seeing a lot of undervalued assets in France too. But I just think that when you're seeing what the US are doing to the UK, buying up assets, I think that, if you're in the US right now, you're looking at the UK and Europe and thinking, well, there's tons of undervalued assets here at the moment because there's a lot of like economic uncertainty in general, and they're just capitalizing on it. And I think that these are the times when, when money is made. You make when you buy and you make when you sell. And if you buy right, which is one of the most important parts, you're already putting yourself, you're taking 5 steps forward before you bought the company. So, I think that obviously when you're in it, I think it's hard. It's like seeing the forest through the trees. When you're in the UK, you're scared, skeptical of different things. But, the US are just looking at it thinking these are cheap assets right now, which is good.
Yeah, absolutely. Speaking of which, do you see Fraser's, what's his name, Mike Ashley, bidding for Hugo Boss, actually?
Oh, did he?
Yeah.
I didn't see that. Okay.
Yeah, no, I think there's another one he was looking at as well. But yeah, I thought that was quite an interesting one. Like Fraser's obviously, what's it called now? Sports Direct, Sports Soccer, Sports Direct, isn't it? So,
yeah, Sports Direct, yeah.
Yeah, so just mad that bidding for Hugo Boss. Like, do you know what? He's done a great job, right? He has done an insane job. I know he's not very well liked, especially from some Geordie fans, but he's done an insane job. Just grown and grown.
I think the high street, if you look at most high streets in the UK, I think London's an exception. You can't really look at London. It's just like a different economy in general. But like if you look at most of the high streets in most of the cities, you got what you can guarantee is going to be on the high street is Sports Direct, JD Sports, Hugo Boss, Krispy Kremes, Costa, Starbucks. But my point is, a lot of like the retail clothing brands, Moss, like you can almost guarantee the River Islands, those sorts of companies, you're going to see those in on most high streets. So for him to buy Hugo Boss, it's just, again, it's a consolidation play, right? You basically, you want to own the high street, what's left of it, you know?
Yeah, sure. Sure.
What's left of it, which would actually still make money. So yeah, it's wild. But guys, whoever's listening, if you want to come and meet me and Mike in person, get Mike's autograph. September the 19th, we're hosting a huge event at Millennium Point in Birmingham. We will put the details to join the waitlist below this. The waitlist goes live this week. So if you're on the waitlist, you've got the best chance of getting an early bird ticket. It's going to be a huge event. There's going to be tons of exhibitors there as well. So it's like a conference / theater style M&A event. It will be the biggest M&A event in the UK. If you do want to join, click the link below this video, and it'd be great to meet you there. And like I said, it'd be a great opportunity for you guys to get Mike's autograph at some point. You'll be able to frame that, put that on eBay.
It's worth a lot of money, that.
You charge for photos on the day too, Mike? I just out of curiosity.
Yeah, I'll probably keep it under 4 figures for a photo. Yeah.
Yeah, well, I don't know. Yeah, just do.
My way of giving back.
Yeah, you got to do your bit. You got to do your bit and give back. So, guys, if you do want a photo autograph from Mike, it's a great opportunity to meet Mike in person on the day.
No one will be there, mate, if you tell him that.
So, all right, guys, we'll wrap today up there. Just trying to keep you updated with what's going on. And I think that the biggest takeaways for me from today's session is obviously avoid brokers, but separately to that, I think when you're looking at leverage in general, and you're looking at what Stripe are looking to pay for PayPal and what sort of leverage they're taking on, as far as I'm concerned, that says it all. And it's the same for the ITV deal, right? What was it like? What was the transaction? 1.6 billion, you said? 1.3 coming from debt?
1.2. No, sorry, 1.2 is cash in the deal. I guess that's...
All right, so stock.
Yeah.
Probably stock.
Yeah, it is.
Stock. Again, nicely highly leveraged deal. Done correctly, though.
So add to that a 0.2 billion earnout, which is quite a small percentage for an earnout, right? Very
small for especially a transaction of that size. It's probably going to be like retention of maybe users or something, I would imagine. Because there is some integration risk, right? You've got two sort of competitors there, one buying the other. So no doubt they're going to be acquiring some serious talent there as well. It's going to be interesting to see how it plays out. So
for sure.
All right, guys. Well, Mike's guard dogs are going off again, and obviously, honestly, I don't know if you heard the noise, my background noise throughout a bit earlier on, but bloody gardener turned up, blasting some leaf blower halfway through. So yeah, all good, guys. Mike, you feed the Rottweilers, and so all right, guys. Well, we will see you on. Yeah, exactly. We'll see you all on Friday. Cheers, guys.
See you Friday.